Today is Wednesday, November 14th. I'm going to do a brief video covering bonds here, and this particular chart is a chart of TLT, which is a long-term bond ETF, and that's the main fund I use to track bond prices, and then I also look at interest rates as well. But let's start with the monthly chart here and look at the longer-term view of bonds. Bonds have been in a major secular bull market since about 1980, and over the last couple years we've seen somewhat of a rising wedge type of pattern, which may be indication of a terminal type of pattern where you start to see overlapping in the pattern there. So this is possible from a chart standpoint that we're seeing a bearish chart pattern develop here. As far as the momentum, this is a stochastic study, and we can see that on the monthly chart, the stochastics has been overbought and it's now turned down, and the percent D line is actually just crossed below 80, which I like to see before considering trade entries. However, there is no divergence at this high, so we saw that the stochastics peak also peaked with price, and ideally it would be, I believe, nice to see another push higher in bonds to a higher price high that creates actually a lower stochastics high and gives us a bearish divergence there before a final top in bonds. Now, I don't know if that's going to take place, and there are some indications. I believe that a top could already be in place in bonds, but from an analysis standpoint, we're probably either looking at a high or possibly a move to slight new highs that will eventually fail, and might fail rather quickly, leading to a significant high in bonds. Now, this is a weekly chart of TLT, and what it shows is that the MACD is actually getting close to crossing back up into a bullish cross here, but that happened after a bearish divergence in the MACD. So we could be setting the stage up for a three push type of pattern where we have three successive higher highs with lower highs in the MACD, or we could also be setting the stage for what's called a hook type of a pattern where you have the MACD just starting to cross, and then as soon as it gets ready to cross, it opens back up and it creates a little bit of a hook there. So that's another thing we might be seeing here. The weekly stochastics momentum bottom in September, and we're moving back up close to overbought. We're relatively neutral right now, somewhere roughly around 50, but I think the ideal trade setup here to short bonds or short an ETF like TLT would be to see 2 to 3, maybe even slightly longer than that, more weeks of sideways to upwards price movement in bonds, and that will allow the stochastics time to move up towards the overbought area. So in 3 weeks we may be very, very close up to the 80 line, and if we can hold below the recent high in bonds as we get the stochastics back up close to overbought, and then we see a cross down, that might be a very, very nice trade opportunity, momentum trading opportunity, looking at the monthly and weekly time frames. Now, going into a daily chart, there's a couple things of interest here. First, the ADX indicator, which is an indicator of trend, has been below 20 now for getting close to 2 months, or at least a month and a half, and we can see this range type of trade with a lot of overlapping price action, no clear trend in bonds. And I've talked about these setups a number of times on the blog, but anytime you see an extended type of a range and you see that ADX trading below 20 or registering readings below 20 for an extended period of time, and then you see the ADX turn and move above 20, you often have the stage set for a very powerful price trend. So currently we saw a triangular type of chart pattern, and the market gapped up and broke out of that, which would bode at least a short-term for at least a short-term move up in bonds. However, the ADX is still down here around 13, so it's going to be probably a week at a minimum, probably more than a week, before this could possibly even come above 20. So what I think may happen here, or I think a great opportunity would be for bonds to move up for a couple weeks into this red box here, which based off of the pattern here would be typical for an upwards ABC type of pattern for it to top somewhere in that range, and this green line will represent a pretty common average type of projection for this last move up off of that low there. So what I think would be ideal to happen would be that we move up into a top here before this ADX reaches 20, or maybe even around the time it reaches that, and then for price to reverse and start moving down, and then we possibly see the ADX consolidate or continue to move up, and we actually get a downtrend in bond prices. So we actually get that ADX moving up as prices have reversed and start to move into a downwards trend. That would also give the weekly stochastics time to move back up into an overbought territory. I think on a, let's look at another indicator here. Let's look at the MACD. We can see the MACD is moving above the 0 line, and again, it would be nice to allow a couple weeks for that to continue to push a little bit higher, get a little bit more overbought, and then possibly pull back and move to a lower high, creating a little bit of MACD divergence as price moves into a higher high. So that would be the ideal setup. We might not get that, but even if we just see the MACD able to push a little bit higher and then we get some type of a sell signal inside that box, I think that would be a great technical opportunity to at least consider a short trade or take technical sell signals for shorting bonds there. On the hourly time frame, we can see that the hourly MACD is overbought. However, there's not any significant bearish divergence yet at this point. So what I think we should see is at least some continued higher highs in bonds before we start to see that momentum wane for possibly a short trade opportunity. And that would, based off the correlation, would tend to occur with some continued weakness in stocks. So if we continue to see some strength in bonds there, that would imply some further downside in stocks just based off of the correlation. So that's my take on bonds, is be patient here, but be looking for a possible major top opportunity. The logic of the price movement suggests that this upward move is weak relative to this downwards move, and that also puts the odds in our favor for attempting short positions on proper technical sell signals. That's all for this update. Have a great day.